let's start with Japan, because they've really been on a tear, and we're seeing that search for value seems to have landed squarely on Japan. This GTV chart on the Bloomberg just showing the incredible ascent that we've seen in the past few days when it comes to the Nikkei, alongside the Russell 2000 here in the U.S. So you, back in January, called for an upside of Japanese stocks of 15%. Is there still room to go higher?
Yes, good evening. So, of course, January was a long time ago, and a lot of things have changed since then. But in principle, the market narrative is really focused on whether or not value can develop a sustainable outperformance trend versus growth. And basically, we think we're at the beginning of this trend, not near the middle or the end of it at all. So that speaks very highly for Japanese equities and, frankly, also European equities as well.
And how much does it help at least other emerging markets across Asia that we continue to see a weakening U.S. dollar?
To some degree, that tide is lifting most boats, but there I'd be a little bit more cautious. I don't think we are in a position yet where we want to go all in and buy emerging markets en masse. Maybe Northern Asia has certainly some more attractive features relative to Southeast Asia, but in general, right now, I think, frankly, Europe and Japan would be my preferred bets in a sort of a cyclical upswing for markets.
So does it feel like the dollar bear market or the dollar bear sentiment has reached a bit of a peak? It doesn't really seem like there's a lot of impetus for a further leg down into a protracted sell-off.
Actually, I'm not so sure about that. I think the dollar is going to be in a multi-year slide. We have to remember that the United States is going to likely carry very significant twin deficits for a long period of time. Europe, is in a slightly different situation. So on a valuation basis, I can see, for us, PPP on euro is 130. Our 12-month forecast is 125. So I still think there's decent downside for the dollar left to go.